And joining me now on set with his perspective on JP Morgan is John Allison, CEO of UNIO Capital. John, thanks again for joining us.
Thank you, Michelle.
So, John, what exactly is this alleged wrongdoing that JP Morgan committed to be slapped with that $13 billion fine?
I think it's more of an alleged being in the wrong place. Well, JP Morgan, as you noted, had to buy Bear Stearns and had to buy Washington Mutual, or was asked to, and did it. And when it did not know all of these things that would emerge. But as a buyer, it ended up having to take responsibility for it, and now is paying this particular price. So they were really caught up in something that has been so complex for everybody involved in the financial services industry. This is a far bigger problem, far bigger transformation we're working our way through than just this thing.
So they're being accused of passing on bad loans knowing that they were bad?
No, I don't think so. I think JP Morgan bought two companies that did all these things and was caught up in it, and now is actually just being paying the price for something that somebody else did and taking the responsibility for what somebody else did. It's now their responsibility, and there's no more to be done about it. They have to assume it. I don't think they did anything.
That is a case to be made that the Fed, the Treasury, they urged Jamie Dimon to step in, be the hero of the day, save Bear to avoid a further meltdown like we saw happen with Lehman. But at the same time, it can be argued, hey, they bought it on the cheap. They still made money from this. It's not like they, were really suffering in this deal.
I think it's a combination of both things. This is a problem of living in the big city. They had an opportunity to buy something, as you pointed out, at a very inexpensive price. At the same time, they were urged to do it. It was by a previous administration. It's one of those complexities. They had to do it on very short time notice. It's very difficult to make these decisions.
Right.
So I think it's a combination of complex things.
Now, this deal hasn't been finalized yet because JP Morgan is still not happy with the criminal charge implications. How likely is it that this is a done deal?
I think what it is a done deal in its sphere. The criminal investigation is being pursued by the California Attorney General, so it's completely different. It's like somebody across the street pursuing a criminal investigation, and you're trying to settle something here. I think it's settled as far as it goes. I think the other thing will continue independently, and I think they all decided that it was the best part of wisdom to conclude this part.
This has sent shockwaves through the financial system. There was an op-ed in the Wall Street Journal calling it a shakedown. There's a lot of people saying this is persecution rather than prosecution, this is extortion, that this could be setting a precedent. As someone in the industry, what's your view?
I think the Wall Street Journal has a point of view. I think it's an extreme point of view. I think what is being missed here is we have had a horrible financial crisis of gargantuan proportions. We're actually working our way through it. So I think part of the problem is you've got the government whose job it is to be an adversary in some respects to business, and you have business defending its interests. And I think we're in one of those situations where we're simply working through a very difficult problem. It's very messy. And I think you can make cases on both sides. But in the end, I sort of look at it more like a doctor would look at a patient. I think you see the patient is working through a problem. The patient, called the U.S. banking industry, is coming out stronger than it ever was before. Even JP Morgan, is $4 trillion in assets. It's a quarter of the U.S. economy in terms of...
And very quickly, what does this mean for JP Morgan and Jamie Dimon? The stock flat today, really unchanged. Year to date, up 23%. Can JP Morgan weather this?
I think it'll weather it very, very easily, because it's like somebody getting a very bad cut. They're bleeding. There's some blood that they've on the ground. They're going to be bandaged up, and they'll move on. And the real key to JP Morgan is to make sure that it keeps the trust of its clients, and that it actually reforms itself, and that the banking industry reforms itself. I think and we're on the way to doing that. I'm more optimistic than most people that we're actually going through a historic period that will come out of stronger than ever.
Stronger than ever. Okay, we hope you're right. Thank you so much, John Allison, for joining us, CEO at UNIO Capital.